Hi friend, this is Peter Bain, founder of ForexMentor.com. Welcome to this video tutorial. And what I'm going to be talking about in this video tutorial is how long should you hold a trade and when should you get out of it. This is a common dilemma for most traders. I'm going to take you back to the week of February 28th, 2011, back to Monday, which was the 28th, and I'm going to be working with the Aussie Yen pair, AUD/JPY. What I'm looking for are swing trades, and I'll show you three coming up shortly. Let's get into it. I'm looking at the Aussie Yen 1 hour chart. I'm going back to Monday, the 28th of February. Again, I'm looking for swing trades. You'll notice price rising. We're now into Tuesday, March 1st, and price is still rising. And rising even further. And so on and so forth. Now's the time to pay attention. We're at the New York Open here, Tuesday, March the 1st. This elongated candle. It's really a price rejection hammer at the New York Open, 8 a.m. Eastern Time, which is one of the 6 times that I like to look for trades during the day. 8 a.m. Eastern Time on March the 1st, New York Open. So now this has my attention because I know that more often than not, we're going to get a swing trade in and around the New York Open. So I'm looking for a trade, a short trade. And what I'm going to do is I'm going to draw a common sense trend line below price action, connecting the lower shadows or wicks of the candles. And what I'm looking for is a break of this trend line southward to confirm that it's time to go short. Okay, we can go short now. We've had a topping out process. We've had spinning top, inverted hammer, spinning top. Lots of candles warning us that we were going to have a downturn in price action. There it is right there. A break below the trend line. Right there. Confirmed by MACD punching down through its trigger line. Now, okay, so we're short. Well, the question is, well, how long are we going to hold this trade? Well, you want the simple answer, to make a fat story thin, is you want to hold it as long as MACD is below its trigger line. Like thus and so. Price declining, we're short, we're in the money. Good angle and separation between MACD and its trigger line. Price continues to decline, we're holding that short trade. Now, price has risen a little bit here, but we're still holding the short trade because MACD is below its trigger line. It's going into oversold territory, so we want to keep an eye on this. Alright, interesting. We're now at the Singapore Open, Tuesday, March the 3rd, 9 p.m. Eastern Time. We got in here just after the New York Open. Now we're at the Singapore Open. That evening, 9 p.m. Eastern Time. There's the spinning top. So we're looking for a turn in the market upwards. The New York Open and Singapore Open times offer good swing trades. So you could collapse this short that we took up here, right here. Nothing wrong with that. But what I'm going to do is I'm going to wait for MACD to tell me what to do. And so MACD is still below its trigger line. We're still holding the short. Price moves sideways. That's okay. Now, to confirm when to get out of the market, I'm going to draw a time to mark resistance or supplier distribution line, connecting this swing high or cycle high back to the last most recent swing high or cycle high, projected out into the future. Now what I'm looking for is a break above that trend line to signal that it's time to get out of the short and go long. Again, we could have covered the short back here. But I'm just offering you another solution that's confirmed by MACD. So let's keep our eye on MACD. MACD is starting to turn up now. Aha! Look at that. Price closed above the trend line. Good place to cover the short or back here, it doesn't matter. And we're looking to go long now. because price has closed above the trend line. But what I need to see is this. I need to see MACD punching up through its trigger line. A good place to go long, take a long trade right now. Now, for you Joe DiNapoli fans out there, Joe would say that the MACD hasn't punched up through its trigger line at this point, but you can assume that it will because it's angling that way. So going long here, nothing wrong with that. But we went long here. We closed our short trade either here or here, and now we're long. Okay, we're long the Aussie yen. Again, looking at the 1 hour chart here. We went long on March the 2nd. And we're going to hold this trade as long as we have good angle and separation between MACD, or more specifically, as long as MACD is above its trigger line. The common dilemma for traders is when to get into a trade and when to get out of it. So we're now long, and we're going to hold the trade as long as MACD is above its trigger line. You can follow along with the caption bottom left part of your screen here. A bit of a market correction here, which would cause some traders to exit this long trade. But again, MACD is still above its trigger line, so we're going to hold. Still holding. Another market correction, but MACD has not gone below its trigger line. Still hasn't gone below its trigger line. We're holding that long trade. Now we've got a nice rise in price. Bit of consolidation in here. MACD above its trigger line. It's moving into overbought territory, so we're looking for turn in the market to facilitate us knowing when that turn takes place. I'm going to draw a Tom DeMark demand or support trend line. By connecting this swing lower cycle low back to the last most recent swing lower cycle low and projecting it out into the future. What I'm looking for here is for price to break below that trend line in order to cover the long trade that we took down here. In actual fact, you know, we've got a spinning top here and another one and another one. So closing the long trade we took back here is not a bad idea. But MACD is still above its trigger line. We're still holding. Aha! What I was looking for is price has broken down below the trend line. So that's the best place to close the long trade that we took back here. Right there. Now, in terms of going short, we're at the New York close here on March the 3rd, which was Thursday. Okay. Now, in order to go short, I'm looking for MACD to punch down through its trigger line to confirm that a short trade is warranted. This spinning top, this red candle, occurred at the New York close on March the 3rd, 8 a.m. I'm sorry, 5 p.m. Eastern Time. Up to now, we've talked about the New York Open, 8 a.m. Eastern Time, Singapore Open, 9 p.m. Eastern Time, and now we're into the third day here. We're at the New York close on March the 3rd, a Thursday. So we're looking to go short. We've already covered our long trade back here. We've had two good trades, one down and one up, and now we're looking for another short trade here. And there it goes. MACD has punched down through its trigger line, confirming the trend line break and confirming that this would be a good place to go short. And again, we would hold that trade as long as MACD is below its trigger line. Now, one thing I haven't covered is the placement of stops. Let's talk about going long. You put your once you go long, you place your stop to 20 to 30 pips southward below the long entry point. And when you go short, your stop is up here 20 to 30 pips away from your price entry. Okay, so on the Aussie yen 1 hour chart, we had 3 good trades in 3 days. 1, 2, 3. Market swing, New York Open, market swing, Singapore Open, and then market swing, New York close. There you go. New York Open, New York close, Singapore Open. 3 a.m. Eastern Time is the London Open. noon Eastern Time is the London close, and 7 p.m. Eastern Time is the Tokyo Open. When I say, for example, the New York market starts at 3 a.m. Eastern Time, that's an approximation. The Forex is not a building or an exchange. It's an electronic medium. So the change in sentiment from the Asian session into the London session can occur in and around 3 a.m. Eastern Time, say between 2 to 4 a.m. Eastern Time. Same logic applies to the other times listed on your screen. So you don't have to be at your computer all day long to catch the trades that I've been talking about in this video. These are the 6 times that you want to be at your computer. Okay, so we've talked about 3 of those times: New York Open, New York Close, and Singapore Open. Well, one of our members at ForexMinter.com, Shirley Hudson, she lives on the west coast of North America, of the United States. And as such, she finds that trading the London close right here, around noon Eastern Time, works best for her because that's 9 a.m. Pacific Time. She has become so astute with her trading that she's turned her knowledge into an offering for you here. ForexMinter.com/London close /. In this course, what Shirley will talk about is exactly how she trades the London close, and she has an accuracy rate of 90%. She'll actually prove to you, showing you her actual trades and results, that her system works. So check it out. Shirley Hudson here is pictured beside Vic Noble, who is the personal coach at ForexMinter.com for all members. He's a currency trader and former broker, so he really knows this business inside out, backwards and forwards. Yes, I'm proud of Shirley. She's a long-standing member of ForexMinter, and she's worked hard to perfect her style, and she's come up with a winning formula. There's the link right down there: ForexMinter.com/London close /. A success rate of 90%. Incredible, unheard of in trading circles. Again, there's the link right there. She'll show you how she approaches the London close and how she trades it with an accuracy rate of 90%. Incredible. Again, ForexMinter.com/London close /. All right, friend, that concludes this video tutorial. I hope it's been instructive for you. And I'd encourage you to visit our site, ForexMinter.com. That's the home page. We have all the right products and services for you to meet your Forex needs. And so check it out, ForexMinter.com. So that concludes this video tutorial. I appreciate you taking the time to go through it, and I will be doing these on a weekly basis, so there will be more. So we'll see you in the next one. Bye for now, friend.